Welcome to Course 2, Unit 4, Lesson 2, What is the Value of Preferred Stock? In this lesson, we're going to learn 3 lesson objectives. The first lesson objective is, where can you conduct research on preferred stock? The second lesson objective is, where can you find the essential elements of preferred stock? And the third lesson objective is, how can you determine the yield to call on a preferred stock? So let's get started. On the left-hand side of my screen, I have a website up that's called quantumonline.com, and over on the right-hand side, you can see I have the buffettsbooks.com website up, which is probably the page that you're viewing this video from. And the reason I have the quantumonline.com webpage pulled up is because this is probably the best website you can go to in order to conduct research on preferred stock. So when you come to this website, everything on their site is free. And I can't recommend this site strongly enough. When you go here, I'd recommend signing up for an account with Quantum Online because then you'll have full access to all their different search results and the different preferred shares and the access to the site. So when you sign up for an account, you can see I have an account, my name right there. The first thing you're going to probably want to do is go to this income table, and you'll click on this and you can select all preferred stock. And when you pull that up, it gives you a list, and you can see there's many of pages, one of 11 pages, and it lists all these preferred stock that you can invest in. This is definitely the most comprehensive spot you can come to in order to find something that's just simply dealing with preferred stock. Everything else you'll probably search, if you do a search online for looking at preferred stock, comes up with just kind of a hodgepodge of information. Nothing's really organized really well, and this is the one site that does that great, is they really have organized information. So we'll just start from left to right, and as you can see at the very top you have the symbols, the description of the security itself, which stock exchange that security is on, the date that the security was introduced, which is the IPO date, the coupon rate, and the annual amount that you'd be paid for a dividend. It says the coupon rate there. You can say the dividend rate, the call price that the preferred stock would be called at, the date for the call, and also the maturity date, the Moody's or S&P rating, which is very useful when you're looking at preferred shares because they often have a little bit of debt and sometimes doesn't display some of the best financial decisions for the companies that you'd be investing in. It tells you whether it's a 15% tax rate or not, when you buy that. And it has the full prospectus where you can go ahead and pull up all the detailed information about each specific preferred stock. Then the last thing it has is the distribution dates. And it, like this very first one that we're looking at here, I might as well just point this out. You can see where it says suspended in red on this one. That means that coupon or the dividend that this preferred stock was paying, it's no longer paying that. So things like that are really important to be able to see, and it's really nice because this gives you all the really important information all in one line for a preferred stock. And to be quite honest with you, you're going to be hard-pressed to find this type of information consolidated all in one place anywhere else. So that's one of the reasons I'm a huge proponent of the Quantum Online website. So one of the nice things about this website is at the top, if you wanted to filter all of these preferred stocks based off of the description, you can go ahead and click Security Description up here at the top. And then what it's going to do is it's going to put the most appetizing ones at the top and the least desirable at the bottom based off of that description. So you're probably going to see something that's a high yield and something that's a cumulative preferred share at the top, like this one that we see here. Now something that you don't want is something that has a suspended dividend payment. So let's go ahead and try this for something else here. Let's say that something that's really important is the call date. Whenever you're looking for a preferred stock, you want to have a longer call date opposed to a shorter one, because if the call date is tomorrow and it's a very high yielding preferred stock, there's a good chance that company is going to go ahead and buy those back so they don't have to pay that high dividend. So The longer that call date is, the longer that you have to hold that preferred stock, the better. So let's go ahead and filter based off of that. So we go ahead and click on call date, and you can see that it pulled up all these securities based off of the longest yielding call dates. And if you would go through the next couple pages, you'd see that the call date keeps decreasing. So here, this very top one is for Simon Property Group. And you can see it has an 8 3/8% yield on the dividend. And this is a cumulative preferred stock, which is good. We'll talk about that in just a second. And you can see that the call date on this is 2027. So right now the year is 2012, and so you have approximately 15 years on this before you're going to have the company's ability, that Simon Property Group has the ability to start buying these preferred shares back. So that's a good thing if you're buying this, especially because it's yielding 8.38%, which is very high. Now we don't know what it's trading for, and that's something that we're going to get into next. But the point I really want you to take away, and this is the first lesson objective, is how powerful this website is, Quantum Online, and coming in here and being able to sort all these different preferred shares, being able to sort out and find something that you're really looking for, because all the information is all available on that one screen capture. And if you really want to dig deep, let's say that you wanted to go ahead and take a closer look at this Simon Property Group. You can pull up this prospectus. Okay, let's go ahead and click on that. Okay, and I opened it up in another window, and here's all the details that you would need to know about that preferred share. Okay, if you were going to buy this preferred stock, this gives you all the information and all the details that you need to know. And that information is right there at the tip of your finger by just clicking on that prospectus right there. Okay, so that's something that you'll definitely want to take a look at, something that you'll want to get in here and play around with. And this website, I can't speak highly enough about it. Okay, so let's go ahead and talk about our second lesson objective, which is where can you find the essential information, and really what is the essential information? Okay, so we're just going to go step by step here. The first thing that I really look for, and now this is something you're going to have to make a determination for yourself, is I want something that's a cumulative preferred stock. Okay, and the reason I want it to be cumulative is because that means the company has to ultimately pay that dividend that they're claiming they have, is that 8.38%. The only way they're not going to pay that is if the company is going to be going bankrupt and they literally cannot make payments to anybody and they're in the process of liquidating. So that's when you're not going to get your payment. Now the company does have the option to defer those payments. They can, let's say that they owe $1 every year, so they're paying you a quarter per share every quarter. Okay, they're paying you 25 cents every quarter. Let's say the company's running into some rough times and they don't want to make that payment. They can still withhold that dividend payment under a cumulative preferred, but when they do have enough money to start making that payment, they have to make up all the payments that they missed before they can pay anyone in the common shares or anything like that. So you're eventually going to get your money, especially if you hold it to the call date or to the maturity date. You're going to receive those dividend payments. And that's what's important. That's why you want to buy a cumulative preferred stock. Now, a non-cumulative preferred means that the company can just miss those payments and they don't have to make it back up to you. So those are something that you really want to avoid. So if we look down here on this Wachovia Preferred Fund, see how it says non-cumulative right here, where I have that highlighted? That's, in my personal opinion, something you really want to avoid. So that's the first thing that we're going to look for when we go down here in the security description. We're always going to be looking for something that's a cumulative preferred stock. Okay, so the next thing I had briefly mentioned was the call date. So as we come over here, and let's just use that Wachovia one again, we can see that the call date on that security is 2022. So there's 10 years from right now, essentially, that you could own that preferred stock before it could be called back by Wachovia where they'd pay you. Now the rate that they're going to pay you would be this call price. Right there's the call price. It's $25. So if they were going to buy that preferred share back from you on that date, they would pay $25 in order to get that preferred share back. Okay? Now the maturity date Okay, if you remember with bonds, the maturity date is typically when you would receive that call price or the par value of a bond, you'd receive that back. But on a lot of preferred shares, you'll see that there's none listed, meaning that that preferred share can stay out there forever. If Wachovia wanted it to stay out there, they could keep it out there for as long as they want. So with a non-cumulative preferred share, technically speaking, Wachovia could issue these preferred shares, never make a dividend payment, and just keep those preferred shares out there for as long as they want and not make one single payment. Now, if they do that, they can never pay their common shareholders a dividend, which that wouldn't last very long, especially if that's how a business like Wachovia would be paying their shareholders consistently instead of through the equity growth. So that would be something that the company would have to do. But technically speaking, that's what not having any type of maturity and having a non-cumulative preferred share, they could do that if they wanted to. So those are things you really want to watch out for. I really like to find companies that have a call date that's within a reasonable amount of time, and I always want to buy a preferred share that actually has a maturity date to it. So just some things to think about. When we get into using the calculator over here on the Buffett's Books website, you can play around with adjusting the years to the call date, and you can see how that adjusts the yield that you're going to receive. Okay, one of the most important things you can do when you're talking about preferred shares is understanding how much debt the company has. Okay, when we look over here, and this is wonderful that they have this on the site, that they have the Moody's rating and the S&P rating. And if you're really not familiar with what these are, I did a lesson on this back in Course 2, Unit 2. I have a whole video on understanding these ratings. But this gives you a real quick idea of the capability of this company to actually fulfill those payments. So when you look at this Wachovia and you see that they're an A minus, this company is able to meet their debt obligations with this type of rating. So the chances of you getting your dividend payment, probably pretty good. You're probably going to receive that dividend payment. But if the company falls on hard times, it would be stopped in a split second because it's a non-cumulative preferred share. So if you really want to dig deep, say you were looking at this company and this is something you were really interested in buying, something that I would personally do is I would pull up the common shares, and I'd look at the Wachovia common shares, and I would go ahead and look at the debt to equity ratio. I would look at the current ratio. I'd look at all those important things that we learned about in Course 2, Unit 3. That's where you're going to be able to assess the health of the company. And when you assess the health, you're also assessing that company's ability to continue making those dividend payments. I already pointed out the prospectus, and that is something that you have to read if you're actually going to be buying preferred stock. So that's where you can access it. And for whatever reason, let's say that you couldn't pull it off of the Quantum Online website, you can go to Wachovia or you can talk to the investor relations. Let me show you something here real fast. Let's say we go over here to the symbol. You click on the symbol, and Quantum Online pulls up all this information specifically for that security. And if you go down, you can see that they have phone numbers listed. And they have a point of contact, Alice Lehman, and here's her phone number for the investor relations portion for Wachovia. And so you can call her up and ask her any question you want about this preferred share. So some of the information you're pulling from this site is pretty amazing, to be quite honest with you, and I think you'll really find it really useful. Okay, so when we're looking at these different preferred shares, you're probably wondering, well, I have no idea how to assess how much this thing's worth or what kind of return I'd get on it. It just really doesn't make a lot of sense. And so what we're going to do is we're going to go ahead and value one of these preferred shares, and we're going to use the Buffett's Books yield to call calculator. Now the reason that I'm using the yield to call is because a lot of preferred shares, as soon as they reach that call date, that company wants to go ahead and repurchase those preferred shares because they don't want to continue paying an 8% interest rate or a 9% interest rate. They want to go ahead and buy those back so that the equity of the business is restored, and also they're not making large interest payments. So my assumption, and this is me personally, you'll have to decide the method that you'd like to use, but I always like to look at the yield that I'm going to get up to that call date, that I'm going to go ahead and have those shares bought out from underneath of me from the company. So that's what I'm looking at. So let's go ahead and do this. I'm going to go ahead and just go up here and show you a search tool on this website. So you go up to the top, and the preferred stock that I'm looking at is SPG-J. Okay, and I'm searching by the ticker symbol, and I hit search, and there you can see it pulls up this preferred share. So when we look at this one, it's listed on the New York Stock Exchange. The coupon rate is 8.38%, and that's because it pays a $4.18 dividend, okay, every year. That's the annual dividend payment. Now, most likely you'll receive that divided into 4 payments, and you'll receive it every 3 months, but that's what you make for the year, okay? Now, if they're going to call this preferred share, meaning they're going to buy it back from you, they're going to pay $50 for it, okay? The call date on this is 2027, okay? So we have approximately 15 years before this preferred share is going to be able to be called back, okay? It has no maturity date, okay? So that's something to kind of beware of. Especially with where interest rates are right now. Interest rates are at an all-time low. And what you'll see is that, or the premium that this preferred share will trade at is going to be tied to, as interest rates rise, that premium is going to become less and less. Remember, the value of a preferred share, the value of a bond decreases as interest rates increase, and vice versa. Okay, so when interest rates go down, the preferred share and the bond are going to go up. So with interest rates being really low, this isn't a real good time to be looking at preferred shares or bonds. Now, if you need something in the short term, just for a year or two, then this might be something that you really want to look at. Okay, so let's go ahead and start plugging some of these numbers into our calculator over here on the Buffett's Books website. So our annual dividend payment we see is $4.18. So we can put in the whole thing, 4.1875. Okay, and we go to the next, which is the call value, and we said that the call value was $50, so we just enter 50. And if you remember, don't put any dollar signs or percent signs in here, just put the raw numbers in so the calculator works properly. Okay, the years to the call date. Now, we'll just do this real fast and we'll put in 15 years, but if you really wanted to do it accurately, you'd have to estimate that that might be, 14 and a half years or 15 and a half. I'm really bad doing the math on the dates there real fast, but we'll just put 15 in here real fast. And then the market price, okay? So the one thing that we don't see on here is what this preferred stock is currently trading for. And we can figure that out by clicking over here onto the New York Stock Exchange chart, okay? So let's go ahead and click on that. Okay, so as we pull up, this is the information, and you can see how this preferred share has been trading. But we see that the price that it's trading at right now is $69.50. Okay, so let's go ahead and plug that in as our market price, $69.50. Okay, and let's go back to our page here. Okay, so when it says the coupon rate is 8.38%, that doesn't mean that you're going to get 8.38%. That just means that if you could buy it at the original price that they issued it at, which was $50, you would get that 8.38% until the preferred share would be called, or you just continue to receive that forever since it has no maturity date. But that's not the case here. You're buying this preferred share for $69.50 if you would buy it today, and not for $50. So that return, that dividend payment is going to be different. And that's what this calculator is doing, is it's figuring that out for you based off of the assumption that this company is going to repurchase these shares at that call date. So as soon as we hit calculate, we see that the yield to call is 4.832%. Okay, so that's a significant difference. So the person that would go and say, wow, this preferred share is, it's a cumulative preferred, which is good. That's what I'm looking for. The Moody's and S&P rating is, within my tolerance. I like that. I'm going to get 8.38% on this if I buy it. And that's not the case at all, because you're paying such a large premium. You're paying almost $70 to purchase this stock. and it's only callable at 50, that's why your yield to call is much lower than the 8.38. You're actually seeing 4.832%. And that's the thing that you really got to focus on when you're buying preferred shares. You've got to do this simple calculation. You've got to figure this out. Because if you don't, you're going to be purchasing something that you really think you're getting a large return, and in fact you're not. So you might be better off maybe going and buying a bond, which is more secure than the preferred share, that's paying a higher return than this 4.8%, buying a corporate bond, and it's less risk. So those are the things you really got to consider when you start looking at preferred shares, and you got to understand all this terminology. And I know it's going to take time, but if you go back and rewatch some of these videos and you get onto this website, this Quantum Online website, and start playing around and clicking and really starting to understand it, it's all going to start making sense for you. So this concludes Course 2, Unit 4, Lesson 2. We covered 3 lesson objectives. The first was where we can conduct research on preferred stocks. The second lesson objective was where can we find the essential elements of a preferred stock. And the third lesson objective was how to determine the yield to call on a preferred stock. So I hope this lesson was helpful in understanding how to calculate all those things, and I'll see you guys in the next lesson.